Welcome back to All Things Money. My name's David Blain, and during the first two segments of today's show, we talked in general about exchange-traded funds, the benefits they offer to you as the investor, as well as myself as an advisor. They're excellent vehicles to implement investment strategies and plans. If you happen to miss the first couple of segments, the replays are available on our website, www.dlblain.com. You can also shoot us an email at allthingsmoney@dlblain.com, and we can fill you in on what you missed, or give us a call. Our phone number is 252-633-0107. In this last segment today, we're going to continue with our discussion of exchange-traded funds. A question that we received from a viewer about, they were asking about something called an MLP. They heard of this thing called an MLP, and they wanted to know what exactly it is. Well, an MLP is short for Master Limited Partnerships. And Master Limited Partnerships are, as they insinuate, partnerships, but they trade on major exchanges as opposed to like a private partnership that you may enter into with a business. Master limited partnerships are given special categorization by the Securities Department as well as the tax code, and so they trade on the New York Stock Exchange, the NASDAQ, and those type of things. And they combine the tax benefits of a limited partnership with the liquidity of trading on an exchange. In the U.S., this MLP status is generally limited to companies that engage in certain businesses. The ones that we're going to focus on today, there are MLPs and some fringe businesses, but the majority of them focus on the transportation of energy commodities such as crude oil and natural gas. There are certain indexes that comprise the energy transportation business. Most of these companies operate things such as pipelines, energy infrastructure assets, and they generate fee-based revenue that are independent of commodity prices. For example, Kinder Morgan Energy Partners is a limited partnership, a master limited partnership, and they own the majority of or a good portion of the oil and gas pipelines throughout the United States. So when a oil tanker, parks at the port, in the Gulf, and they offload these big oil tankers into pipelines, well, a company like Kinder Morgan receives a fee for every gallon of oil that is transported along their pipelines. It's completely independent of the price of the commodity, and so they tend to generate very stable revenues for their investors. So there's two big advantages of MLPs. Number one, they generally make quarterly distributions to the partners, and they provide a steady stream of income. We'll get into some of the yields that they produce, but currently, 5, 6, 7% yields are not unheard of. The second advantage of MLPs is that they avoid corporate income tax at the federal and state level, and they pass the tax liabilities through to the individual partners, which is a good thing. Typically, your C corporation, such as a Coca-Cola, gets taxed at the corporate level, and then they pay you a dividend, and you pay tax on that dividend. Well, master limited partnerships, there's no tax at the corporate level, so you just pay tax at the individual level, so you avoid that double taxation. So that's kind of a brief overview of master limited partnerships. Why we think you need to have them in your portfolio. A couple of reasons. Number one, they tend to move in a different direction from other asset classes such as the stock market, the bond market, the commodity market. The correlation, which measures the degree at which limited partnerships, energy limited partnerships move with the stock market, is about 0.65. The REITs is about 0.48. The bond index is only 0.07, and the commodity index is 0.48. So that's good. So there's some decent diversification benefits in there. The 10-year return of the MLP index has been about 18% compounded. That, of course, and these numbers I'm using here as of September, but they're still reasonably accurate, as opposed to the S&P 500, which returned a negative 1.46, the REIT index at 10.73, the bond at 6.39, and the commodity index at 4.58. So they provide some good diversification into your portfolio, along with that nice yield. Now, how do you invest in these master limited partnerships? Well, you can go out and you can select, purchase Kinder Morgan Energy on your own, Suburban Propane Partners. You can go pick the individual MLPs. What I think is a much better way to do it is to select an exchange-traded fund or exchange-traded note that tracks the index of the MLPs. One of the ones we like a lot is ticker symbol AMJ. It's an exchange-traded note, and it tracks about the 20 to 25 largest master limited partnerships in the United States. It currently pays a dividend yield of approximately 5.7 to 6%, which is a great yield. Now, there is some risk. The prices of these do go up and down, but the dividends are pretty steady that they pay out. After the market crash of 2008, they certainly went down in value. So if things that go up and down in value make you extremely nervous, would not recommend it. They did recover very nicely, and throughout the whole time, they continued to pay their dividend out. Part of this dividend is, in fact, tax advantaged, so there are some advantages to the dividend of master limited partnerships. Whether you purchase them in exchange-traded note or exchange-traded fund, there are slight differences between the two, probably beyond the scope of this show, because a lot depends on your individual tax situation, whether you're buying them in a IRA or a taxable account, if you're in a high tax bracket, a low tax bracket. But suffice to say that we think the master limited partnership industry or sector, if you will, is vastly underrepresented in most investors' portfolio, and that it's worth taking a look at. If you have any questions on that, please feel free to give us a call or an email. We're out of time for today's show, but we'd encourage you to take a look at some of those master limited partnership ETFs. Well, until next week, this is David Blain for All Things Money.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media.